Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I also have here Graham Wickham, President and CEO of Wickham Financial and Insurance Services. Graham, how did the investment markets do last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. Yeah, we had some pretty modest declines when we saw interest rates really spike up. So if we look at some market performance, you saw the Nasdaq, that tech-driven market, down about 1%. We saw the S&P 500 off about 0.5%. Now the small cap Russell 2000, that was pretty flat. Two sectors that kind of led the charge and fell the most. We saw energy up about 2%, but technology fell about 2.5%. After 5 consecutive weeks of gains. So not surprising to see a little bit of a pullback. If we look at interest rates and inflation, so we saw the U.S. Treasury yield spike on Tuesday. Why? We saw a pretty weak 5-year note auction from the government. We saw the 10-year reach a 1-month high of about 4.64%, affecting interest rates across the board. If we look at some economic indicators, so we saw the second estimate of Q1 GDP growth. Now that was revised down to about 1.3% from 1.6%. Now, we even saw within those numbers some core numbers within the economy still stay pretty robust, meaning that, yeah, again, we're still in a very sticky interest rate or sticky inflationary environment. So we did see home prices reach some record highs in March, rising about 6.5% year over year. At the same time, that put some real pressure on home sales. They came off about 7.7% month over month, again, due to those interest rates spiking up, the mortgage rates moving up, and I would say sellers, buyers reluctant to do selling or buying. If we go overseas and we look at some international trends or some of the things that are going on internationally, we saw the Eurozone inflation increase to about 2.6% year over year, but we still have some pretty strong plans, or at least Europe is indicating with their central bank, they still have plans to be cutting rates. If we look over at the IMF, the International Monetary Fund, they raised China's economic growth forecast for the year. Now, let's go into next week. It's pretty much going to be dominated by 3 different areas on the calendar. We'll be looking at U.S. job data, interest rate decisions, just some general international events. Jeremy?
Sounds good, Graham. Well, we always appreciate the information. And to our listeners, we are having our 5th annual car show coming up here this Saturday. The weather looks great. So come out if you have a car, a truck, or a bike that you want to show off, or just come look at some cool cars. Please call our office or email me here at Wickham Financial Group, and we can get you set up. If you have any questions, please let us know, and we look forward to seeing you next week. Talk to you soon.
Take care.